Okay, guys. Very good morning to some, good afternoon, good evening. There's quite a number of people from around the world. My name is Kenny Simon. I would like to welcome you guys on today's live webinar. We're on a live webinar titled "The Wonders of Geometric Patterns Analysis Pre-NFP." So I believe most of you guys here have got to some degree, experience in the forex market, and perhaps the basics also, and I would like to share with you something new, something unique that I call it geometric patterns analysis. So we'll be going on to a couple of basics, but for those who would like to go into it a bit more on the geometric patterns and basics of geometric patterns and all that, we are starting a second session later on at about 4 p.m. Cyprus time. Okay, so could join in on that one, and that is mainly catered to the beginners level. Okay, so before we start, I'll just introduce you as I've already introduced you to the title, and we'll just go into the risk warning just before we start. So very briefly, here you go. The risk warning is such that the Forex and CFDs are leverage products and involve a high level of risk and can result in the loss of all your invested capital. Okay, so therefore Forex and CFDs may not be suitable for all investors, and you should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. So that's basically it, to go over the risk warning with you. And before anything else, before we go on to the chart, before I show you all these technicalities of geometric patterns and everything else, I just would like to share with you a couple of things, a couple of basics first, before we'll go deeper into the basics of geometric patterns later on. But I just want to touch base a little bit because this session is more onto the live pattern pre-NFP, so we wouldn't want to miss out on the current movements in the market as well, since London Open as well have moved the market quite a bit. So I would like to just give you a bit of a intro on geometric patterns, but most of you guys are quite familiar with chart patterns. Okay, so I would like to just give you a bit of an idea about geometric patterns, but to tell you firstly that geometric patterns, chart patterns, and harmonic patterns, they all come in different categories, but at the end of the day, they are all simply price patterns. So some of you guys are quite familiar with double tops, let's say, triangles, triple bottom, all these kind of patterns that you can actually see here, the flag and pole and all that, and that would come under the category of chart patterns. And of course, some of you guys are more familiar, I would guess, with the harmonic patterns, which is more modern, and then you've got the use of Fibonacci to confirm these patterns, and these patterns, as you can see, are called the back pattern, and also the butterfly, deep butterfly, and various other names after animals, mainly on these harmonic patterns. Okay, so we've got rules behind trading them and things like that. So all these kind of trading, this comes under harmonic patterns type analysis. So what are geometric patterns then? So geometric patterns, very simply, is I have consolidated all these harmonic pattern, chart patterns, and I've sort of experimented on quite a number of charts and patterns and found the higher probability and lower probability ones. And I found that it's very interesting. Everything could actually be summed up into a simple ABCD-like pattern. So this is my base, my core foundation of the pattern is a simple or simplistic ABCD pattern that most of you, I would guess, are very familiar with it. So what I've done is then I've experimented on just using these ABCD patterns in knowing how we can actually come up with a better, sharper way of analyzing the market using shapes, especially the triangles, circles, and also squares. So then I came up with the idea that a simplistic ABCD pattern, once you have attached the right point to the other points correctly, then you would get a very nice geometric shape, and that could be not only interesting to look at, but they would be measurable or calculatable. I mean, you could calculate that to come under the theory of Pythagoras or Archimedes, that under those of you guys who are more familiar than me in the area of mathematics would understand us much more. But we don't want to have that too complicated, so we use the help of Fibonacci to do all this confirmation. Okay, so I'll just take you through, and we'll cover this much more in the basics of geometric pattern and what it is and things like that in the second session. But here, for you guys who are quite familiar with the market already, having your own strategies as well, this could be added into your toolbox for trading. Okay, so I just want to give you an idea of how I go into drawing the ABCD pattern first and then converting it into a geometric pattern, so we can then go onto the MT4 platform and start looking at the pre-effect of the NFP and look into how we could forecast the market a bit better, okay, using geometric patterns. So we've got a very simple way. You guys are very familiar with it, I would guess. It's starting with a low, high, and then low. So we have got, let's say you have got a chart that goes like this. We'll practice and go into live charts in a minute. But here you've got always we would start with a trend. So if at all you're looking into a trend that is bullish, then I would only look for bullish ABCD pattern. So here I'll draw very simple. You've got a bullish ABCD pattern would look like that, as I have shown you on the PBT earlier on my slides, and a bearish one would look like this, as simple as that, right? So you've got your bullish one looking like this and a bearish one looking like that. So here we've got a sort of bullish type pattern, and what we do is we only trade the last leg of C to D. Okay, so we wait until the formation of the pattern goes on from A to B and C, and then once C goes a little bit more upwards, then we start looking at drawing out the potential ABCD pattern. So let's say we've got A here, B, C. We are actually making a forecast or predicting where D would potentially go to. Okay, so one of the rules, or very simple rule of understanding where D could potentially go, is just to have the AB length equal CD length. Now this is very simple. I'll show you onto the chart in a minute, where you draw your A to B and then you drag and bring it right across there, and you can actually get that prediction of D. Okay, that's your first option in looking at where the D could potentially land. Okay, so just to warm up a little bit on that ABCD type pattern, I'll just go to the next slide on step 2, whereby you're looking into drawing the first leg. So your first leg of ABCD would go like that, A to B, okay? And you're looking for your lowest leg, B to C. So I'll just proceed to the next slide. You're looking at your A to B, your red line, and then your B to C, the second leg. So now, with knowing how we could do the C to D leg, is just by copying the A to B leg and dragging it across, so you would actually get something like this. Okay, there you go. So hence you see that they look similar. Okay, for the AB length, sometimes, most of the times, the length of the candles and number of candles A to B would be more or less the same with the number of candles in C to D. But most importantly, you want to be looking at the length in terms of the drawing itself. That line, the length of that line would be similar, more or less. So then you've got a point right there to forecast where D could actually land. So that's why the first way is to look into the AB length equals CD. Here I've written wrongly, I think CB, CD. Okay, so AB equals CD. Okay, so then we'll proceed on to the next slide right there. And as you can see, you've got a line that you can draw and have that a projection of where D could actually go. Now, the first method, as I've mentioned, is AB length equals CD to find that D point. Your second method of looking for the D point could be with the Fibonacci tool itself. So that is where we need to drag A to B and look for the C point. But we'll go all into that in a bit when we go into the charts. Okay, so let's just go into that. This would be roughly how we would be projecting where D would land based on the Fibonacci level of the C point. Okay, that's your second way or second option with the Fibonacci. But we'll keep it simple, whereby we try to look into the AB equals CD first before we go on to the Fibonacci side of things. Okay. All right. So that's basically it. The D projection, the second option, would be using Fibonacci, whereby the D point will be equal to the Fibonacci ratio of B to C. Okay, so for you guys who are just looking at a theory section, the theory side of things now, we'll move now onto the chart, and it will be clearer for you to understand. Now, the first step that I would do usually, let's say we're looking at the USD JPY, this is pre-NFP, so most of you guys are looking into the dollar paired up, dollar oriented pairs. So this is where we would like to first understand the trend. Now, me, very simply, I don't use much indicators to identify trends. I use a lot of visual techniques as well, and one of it I would like to share with you is just looking at the whole angle of the trend itself. Now, what I usually do is I cluster up three time frames. Let's say we're looking into USD JPY now, and my favorite is to use the 1 hour chart, and then I cluster that up with 4 hourly, and also your daily chart. That means I see it in a set or a group of 3 time frames in order to see a match in the trend side of things. So first rule is always to zoom out as much as you can, so I can see that the whole angle here, as you can see, I just take the highest point right there, and I just have a rough line to draw it that way to see this is your price now, roughly, right? And then you've got a big move. The most obvious move that you can see is this big move down, and that big move down has got an angle. You see this angle here? Let's say if you're looking at your watch or your clock, you've got 12 o'clock around here, you've got your 3 o'clock around here, so that is more like a 4 o'clock or 5 o'clocks down here, 6 o'clocks down there. This is exactly like what you would see on your clock, on the wall of your house, or on your watch, right? So anything that's moving like upwards, very, very bullish, like this one here is moving upwards like this, right? This is a 12 o'clock angle, okay? And this is a 4 o'clock angle. Now, when you've got something moving at a 4 o'clock angle, it is not as strong as a 6 o'clock angle. Okay, it's similar to 2 o'clock angle, okay, and 1 o'clock angle, right? So if you've got a trend moving like this, going up, going towards 1 o'clock, that is quite bullish, okay? But you need to zoom out first. Start with your 1 hour, let's say, and if you've got a trend, this is just using your visual techniques. If you've got a lot of volatility, but the angle is at 2 o'clock, that is not showing us that it's more bullish than a 1 o'clock angle. That means that it may be heading towards the 3 o'clock side of it. But if you've got a move that is going 3 o'clock, like this one here, okay, it's not moving very high up, not moving very high, very low downwards, it's just moving sideways like that, that's your 3 o'clock angle. So now we're at a 4 o'clock angle. What this means is that it has come away from 3 o'clock, moving downwards towards the bearishness, but not too strong a bearish trend. It hasn't reached a 5 o'clock angle or a 6 o'clock angle as yet. So my conclusion, just based on this technique itself, on the 1 hour chart, is that yes, you've got some bearishness, but the bearishness is not as strong as yet. Something needs to push it or pull it downwards much more. So perhaps the NFP, okay? So, or maybe not, maybe it would go opposite direction. But here we're just starting with the 1 hour chart as of now. Okay, I'll erase all drawings here. We go on back into this, and we'll now go into the 4 hour chart. Now, when you go into the 4 hour chart, again, zoom in. As you can see, you've got a bit of a sideways 3 o'clock type angle here, okay? So what it was previously in these, what you can do is that your 1 hour chart, you see it as a short term, your 4 hour chart, you see it as a medium term, and your daily chart, you see it as a long term, okay? That's your medium here, okay? That's your short, okay? So you could see it's exactly like small, medium, large. Okay, so you got just to make you to have you understand it or remember it better. Your 1 hour chart. Let's say you see it as a cluster of three. Okay, 1 hour, 4 hour daily. That's your short term, medium term, and your long term. Okay, and here as we see it, we could see two big moves, right? I mean, the most obvious one when we zoom out is this angle here and also this angle here. So this is the most recent angle here. Okay, so this angle here, it's a little bit steeper than the 4 o'clock earlier on the 1 hour chart. Okay, it's a slightly steeper, or maybe it's almost the same. So at least we know that we had a 1 o'clock type angle, but then you've got a huge fall of the USD versus the yen. Okay, of course, we have got a couple of tips for you. I've got one tip for you. I mean, this last couple of months since Trump came into the picture, or even slightly before that, we found that, or I found that the word currency war has got a lot of impact into the market. Okay, so if you hear Trump or any, especially Trump nowadays, if he talks about currency manipulators like China or South Korea or any other countries, when he speaks about that, and then there is a connection with currency war or currency manipulation, then you would see that most often the dollar falls against the yen, especially with the USD JPY. So that has actually happened, and that happened with the fall of the dollar versus the yen just a couple of days ago as well. You know, yesterday, day before yesterday, you have seen that that was right after Trump's talk about South Korea and other countries manipulating, especially China as well. He called them as currency manipulators, and then you've got the subject of currency war coming to the picture, and immediately after you have the dollar falling against the yen. So this is one thing to look out for as well on the geopolitics side of things. Okay, and this has been one of the impact onto the USD versus the yen, especially, or the USD in general. Okay, so that can be also reflected. I'm not sure whether you guys look into the USD index. Okay, so the USD index is another very nice tool. It's not a tradable instrument. It could be used as your backup in terms of understanding how strong the dollar is compared to 6 other currencies. So it's a basket of it's the US dollar compared against a basket of 6 currencies. So that would give you a bit of an idea how strong the US dollar is, or how weak the US dollar is against 6 other currencies, giving you an idea of USD strength or weakness as a whole. Okay, so let's get back into what we've just talked about, the clock angle. Okay, so here itself, we've got a bit of a slightly steeper sort of angle towards 4 o'clock and slightly below than 4 o'clock. So here we've got a bit of an idea that the medium term, where you are looking at a 4 hour, may give us a bit of a downward pressure for the dollar. This is just us talking about trend, just as a whole. We haven't gone into the analysis of it based on the patterns as yet. Okay, so then I would like to erase that. And now we're looking a bit into the longer term. Now, the longer term here, we have got the most significant moves that we could see. One, we've got it right there. Okay, we've got a move up here, of course, but now most recent we've got that. Now that angle here is between 5 to 6 o'clock angle. Okay, on the long term, we're talking about the long term for the daily. So the USD versus the yen is giving me a bit of a hint that the market might take it lower, mainly just from the trend angle view, and that's a 5 to 6 o'clock angle, and it is actually moving quite a bit. So here I would like to combine that as well, not only the trend analysis with price action. Price action, we're looking at 11310. So let me just write the price here, 113.10. That is your price based on USD JPY alone. Okay, now we have got 4 sets of psychological number based on this last 2 digit here. This last 2 digit is 10. It's not one of the psychological levels or numbers that I use. I usually use 00. Okay, it's not in any order. All you just need to do is you can write it down. We can plan more tutorials here organized by Blackwell Global and Blackwell Global Academy with FX Geometry. Not a problem. We've got quite a number of planned tutorials for that on psychological numbers alone. So we've got 00, we've got 20, okay, we've got 50, and we've also got 80. Now this is just the last 2 digits here. What I mean by that is that usually you see all these big corrections, all these big moves, like prices goes up all the way here and it start falling down, and we want to look at all this level where it started to fall, or this level here when it started to rise, or this level here when it started to fall. Usually the last bits of prices there, it's usually very close to either one of the psychological numbers. Okay, so in other words, a tip for you guys: if you guys would like to trade, to enter a trade, let's say your entry price, it should not, I repeat, be exactly or too close to either one of the psychological numbers. So 113.00 is a big no-no, 113.20 is a big no-no, 113.50 and 113.80, these are all numbers directly or on the spot of the psychological numbers. They're a big no-no to enter your trade. So I've got a very nice tip for you. If you want to experiment on these psychological numbers, look at your current trade. Look at your current trades at this moment of time. Let's say your trade history, not your current trade, your trade history that you have suffered, let's say, losses. Okay, look at the losing ones. Now look at whether or not your entry price, your take profit price, or even your stop loss, were they too close to these numbers here? Okay, usually that's the case. 90+% of the time, the entry price, your buying price or your selling price is not an ideal buying or selling price, and that is one of the big factor of stopping you out, or you being in the wrong direction. But most importantly, you have not bought or sold in the right type of price. Okay, that's where price action is in combination with psychological levels or psychological numbers. Okay, so let's say if I look into this trend that is picking up to the downside, and I would like to enter into a sell order, or I prefer a bearish move. I prefer in entering into a bearish move. Then that 00, that 10, for example, you got price, you're expecting for the price to go lower, right? But as it goes lower, the psychological number that is closest to its 00. So you've got 113.00. Now it's closest to the 00, and if you would like to sell, you should it's best to sell at least about 10 pips below that number there. So 112.90 would be an area that you would need to wait till prices go lower to that level there to give you a better idea that price can actually drop even more. Okay, so when they go lower than the psychological number, then you've got better confidence. Not better confidence. The market has got that level to look at, and once it goes lower than that, then you've got a better possibility or probability for market to go lower. If they go higher than these numbers, then you've got higher probability for the market to go higher. Okay, to aim at the next psychological level as well. Okay, so I hope that makes sense, but if it does not, don't worry. You can always write to us here at Blackwell Global, and we'll feel happy to look into organizing more tutorials and sessions based on the psychological numbers itself. Okay, so let's get back now into the patterns. Okay, so here itself, just by looking into the 1 hour, 4 hour, and daily, we've got a bit of an idea that the market is giving us some hints bit on the downside type move, okay, especially on the daily chart. Why especially in the daily chart? Because that angle of drop is quite sharp, it's quite steep, it's towards 5 to 6 o'clock, and it's actually heading very nicely towards the 6 o'clock. So let's say if I zoom in a little bit, I just want to look into what's going on with the candles itself. Okay, here itself, in just in terms of trend, we could see that we've got domination or dominance by bearish candles. As you can see, you've got more bearish candles that are bigger as well, and we could see that price itself is not giving me the hint as yet. It's 113.07. I need it to go lower than 113.00 to give me more hints to the downside. But do I see any patterns? Do we see any ABCD? Now, what kind of ABCD would we be looking for, since we have got more hints to the downside as opposed to the upside? Okay, yes, we've got a little bit of a what do you call that, appreciation of price right there. Okay, we've got appreciation of price, but we've also got a bit of a support area right there going upwards. Okay, now here itself, I mean, if we're looking at a bearish type trend, then we are looking at patterns, bearish type patterns like this. Okay, that's the bearish type pattern that you're looking at. That's your A, that's your B, that's your C, that's your D. But you would like to look at first prices coming downwards, going up, all right, and then coming downwards. But this downward move, there's no way for us to predict exactly to enter at the C and exactly here. So we are trading actually anywhere in the middle of the C to D move. Okay, that's what we're doing. Now here, to give you an example, we have got very quickly here, upon just at a glance, I've got a bit of a pattern here going on. Let's say, but this is a bullish type pattern that we can see for practice purposes. Okay, you've got a move up here, correct? And then you've got a move down here, and then we're predicting that move upwards. So there may be some more room, but how do we know how much room does it have much more to go upwards? Okay, if at all this is a bullish type trend, you've got a better probability to trade a bullish ABCD. But this is for practice purposes. Let's say this is the ABCD that we would like to trade. How do we actually go about drawing it? Okay, very simple. You start off with an A to B like that. Very simple. First line, first leg, A to B. Okay, now you draw your B to C all the way down like that. Lowest point. Okay, so you've got A to B. How do you predict your D point? You simply double click on the trend line on your MT4, like a global MT4, let's say, and you go on and drag it like that. Okay, you redraw your initial A to B line like that. You've got A, B, C, and D. So simply, just so that you get a better idea of where D could potentially land, you just put in a horizontal line as such, and that tells us that there is a possibility, if at all the uptrend persists, of prices for USD JPY to land at that area there, 113.57. Now, this 113.57, if we look into the last two digits itself, let's say after the decimal, we're looking at 113.58, let's say. Okay, we'll take the three numbers after the decimal to be just two digits. Okay, so here what we do is, I'll just write down the price that we have sort of predicted. Okay, 113.58 for that to land at 11358. But for me, I would need to tweak that based on the psychological number. So I look at 58. Now, if you're going up, you need to exit before the psychological number. So 58 is closest to the 50 psych number. Okay, so before your price goes to 50, you know why? Because the market might just turn around very close to 50. Okay, 113.50. So it's best for you to sort of exit or consider exiting the market way before it reaches 50, perhaps between 5 to 10 pips. Let's say, for example, me, I like using 10 pips below the 50, so I would then look into exiting at 113.40. Okay, not 50, not 60 as well, because 50 is where you could get potentially a reversal happening close to the 50 area. So that would be ideally an area for you to look into escaping as fast as possible there. Okay, 11340. So let me just line that one up, give you an idea. Okay, all right, so here I'll just put that, I line that up based on the 50 psychological number. Okay, 50, right? I'll change the color there. Let's say the yellow one here, just so that you get an idea. That's your psychological level there, 11350 area. Okay, so yes, prices may be going upwards, but you need to look into escaping or exiting before it reaches 113.50. Okay, so that you need to be really careful with that area there. So now you've got a zone as opposed to a line. So I like playing with, I wouldn't say play, but I would like to trade based on zones or areas as opposed to just a single line. Okay, so now you've got two lines there that makes up a zone that we can call it a reversal, potential reversal zone, or PRZ, meaning that if price goes up, it might actually reverse anywhere around there. So now we'll use the Fibonacci as well, but we'll cover this a bit more in a more advanced type sessions that we can always plan that ahead. And here, if I were to use the Fibonacci rule of finding an extra line so that we get a bit of an idea of where prices could land in the D point, I need to look for my C point first. My C points tells me that this is my A, B, C, tells me that it's quite close to the 61.8. It's between 50% and 61.8%. Okay, so what I do then is I've got a bit of a formula that I, based on the C point, I'm able to use the Fibonacci extension ratio to look at where it might go upwards. So usually if it is 50%, okay, if your C point here, okay, is 50%, right, Fibonacci of A to B, right, then it could reach extension level of 200%. Okay, that's 4 times. Yeah, I'll demonstrate and show you that in a bit. If it is 61.8%, then your extension level would be roughly at 161.8% or so. Okay, the length, all right, of the A to B. So sorry, of the B to C, not A to B. So we are looking at 200 times the length of B to C, 161.8% time more than the B to C. So that's my B and that's my C. So what we do next is we use Fibonacci to sort of polish and tweak this area that we are predicting that market could go up to. Okay, so what we do next is I'll erase all drawings and I'll start using a Fibonacci and pull it from B to C to look for 1.618, which is right there, okay, which is equal to 161%, 0.8, okay, and also your 200%, which is way up here. Okay, there we go, there we go. So we've got it right there. We'll take that one off, and we would then look into making that zone of where price could potentially reverse. Okay, that is my PRZ zone. So this is where I then type very quickly PRZ, which actually stands for my price reversal or probable reversal zone right there. So what that means is there is a potential price, yes, going up, but starting to play around and reverse. So what we would then do is to enter somewhere in the middle. So how do we actually know where should we actually enter? Now, this is where we use the principles of geometric patterns. So this is how we do it now. I'll just show you now. How do we actually convert this simple ABCD pattern that you see? So I've got my A here, B, C, and D, correct? And this is it still is in the category of chart pattern now. It is not yet a geometric pattern. So to convert this ABCD into a geometric pattern, it is very easy. All we need to do is we attach the point A, all right, up to point D. And once we've done that, we've got a center point here that I call the centroid. Okay, so this centroid area, once you've got the centroid area, this is where, when you have converted this simple ABCD pattern into a geometric pattern, and if you do attach the other lines, it becomes even more obvious a geometric pattern right there. Okay, so this is how it looks, and every drawing would have its reason to do so as well. Okay, because you can easily double click that, okay, and attach another line on there, and these lines here all automatically becomes a trend line for you to consider the future moves. So if it does actually come downwards, let's say, it might most of the time hits this line automatically. So just by copying and pasting these lines as well, it becomes a geometric type analysis or trend line for you. Okay, so we've got it just started off with an A, B, C, D, and once you attach all these lines, you get a three-dimensional, two-dimensional type geometric type pattern. Okay, and this one becomes your trend line. Okay, so we are looking into that now. Let me just get rid of that to not confuse you guys anymore. Okay, let's see. Take that away. Now let's look into that centroid area. That centroid area is really a key area for us, okay, especially geometric pattern traders, whereby this is an area that we could potentially find entry areas, or we call it trading areas, because your direction is to the upside. Okay, so you want to be looking at entry area anywhere above that 112 80 area. Now 112.80 is again right on the dot psychological number. So we don't trade in this area at this price. We don't enter a buy or a sell usually at this area on the dot. It's not an ideal area or the right price. If you want to follow the principles of psychological numbers, then to actually trade based on this area, you want to plus at least 10 pips on the psychological level. So that would give you 112.90 as your possible trading area to go upwards. And this would be a better price compared to that price here, because this is a very dangerous area, because this is where prices might just turn. Okay, so you would need to wait till prices go above. Now in this case, you've got 11312 now, right? So 112.90 was way before, so that gave us a nice area that you could have been trading already at that time. Okay, so to aim at the upside. So what about the upside? Now if you were to enter the market at that price, let's say for example, and you're aiming up high to this area, but just aiming up high itself is quite risky. So we want to look at the closest price that you can see in this zone, this lower area of the zone, marked at 113.52. So you've got 113.52. Okay, all right, so 52, if you're going upwards, now the closest psychological number to 52 before reaching 52 is 50, correct? So then if you would like to adjust or tweak that number, that price based on psychological number, you want to be looking at 40. So 113.40 would be your ideal area for, let's say, an example, the TP area, right? So you go 113.40, and then your entry would be 112.90. All right, that's an example. I think I put some questions here. Give me a second, guys. All right. Okay. Hi, Aditya. Yes. What about Aditya's question is, how about 112.70? Now, how 112.70? Yes, it is It depends what you want to do with it. I mean, your 11270, is it, let's say, potentially your take profit zone, or is it actually your entry area? It does actually depend. Firstly, you plan your entry and you take profit, but before that, you need to know which direction you're actually going, upwards or downwards. Okay, so here, let's say it is on the upwards, because what we are looking at the moment is an ABCD upwards. Okay, we've not actually gone on to the trend analysis as yet, specifically on USD/JPY, so we will do so in a bit. But here, let's say you are wanting to trade to the upside. Okay, to the upside, 11270, it's really a very risky area. If you are trading, let's say a buy, let's say you are thinking of 112.70, correct, to the upside. All right, now if you're looking to the upside, there is a threat or a risk area, psychological level, that is very close to 70. To the upside is 80. So prices might go up and start to come down very close to that 80 area, might, because you've got that as your psychological level. So the answer to that, a very short answer to that question, is it's not a good level or number or price to actually buy. It's best to look into 90, because 10 pips above 80. Once it gone 10 pips above, then you're looking at 90. So 11290 would be a better price to buy, for example, as opposed to 11270. Okay, so that is if the trend is looked to be, persisting. Like now, for example, we've got 11310. Yeah, 11310. Now you're expecting prices to move up, but while you move upwards, you have to ask yourself, are there threats to the upside? The answer to that is yes, there is a threat, because if 10 goes to 11, 11310, 11311 and above, you've got this 20 side number to look at as well. So this is why there may be a reason why you have got candles, price action wise, is not giving you that good longish type candle as well, because they're still thinking. Okay, so that's basically it. Okay, all right, Aditya, hope that was clear for you. Okay, so that's basically it. So now let's just look into this pre-NFP thing, and what might possibly be going on. Okay, let's just look into that. I'll just erase all drawing first, because we have started quite late, so we've still got about 15-20 minutes to go, so we've got lots of time to look into this trend analysis, as well as patterns analysis for the USD/JPY. Okay, so don't worry. There we go. So let's say we look at this as an example. You guys have got a bit of an idea now about how a ABCD pattern could be converted to a geometric type pattern, and how I use it to trade using the analysis, but most importantly, how you get that centroid area, because that's your trading area. Now that centroid area, let me just make that a little thicker, okay, just so that I can show you what I mean about this centroid area. Now this centroid area is highly important, so I'll just rewind how I get that centroid area. You start off with an A to B, B to C, and C to D, like that, right? Just attach that A all the way to D, and then you've got a center area right there. Okay, that's how you get your centroid area. So that's your centroid area here. Okay, so let me just erase all that again. Now, the reason why I want to talk about the centroid area as well is that the centroid area somehow automatically, for quite a number of years, me trading in this way, have shown me that the centroid area could act as a significant support resistance line almost automatically. So if I go into the 4-hour chart, let's say, or the daily chart or anywhere else, and I'll just reduce the size, you could see that almost automatically, without even planning it, I mean, just drawing that on the center line, you can see that that central area has acted as a very significant both support and resistance. In this case here, you've got a very powerful support there, and then some resistance going on there, some more support, some more resistance, and then quite a big sort of support. Prices just jumped up, bounced upwards from that centroid thick yellow line that I've just drawn. And then you've got more support and more of that going through. If I go into the daily chart again and giving you a bigger picture, again looking back and back, this is as far back as March last year, okay, all the way here as well, okay. So here you could see again, very significant resistant prices fell all the way down here after there, that area there, as well as coming through it, of course. But you've got concentration of price there, concentration of price as well. That's a very nice support there, right on the dot of that significant, what do you call it, yellow thick line that is drawn from the centroid area itself. Okay, so there you go. This is why I like using the centroid area as my main reference point as well. Of course, your trading area, your plan before you enter and exit should actually be based on that centroid. Of course, you've got, you see that centroid, look at how it actually respected that line as well here. So you've got your methods and strategies, all obviously, and that would be best to add it onto this type technique as well. You can always add that on and see how much it could sharpen your analysis in terms of your entry, especially exits, because price action, of course, we know it as number one, but how do we actually tweak these numbers and know the levels that may pose as your risk? So you want to avoid trading at the time that is so close to that risky price area, or exit before it reaches the risky price area. Okay, so there you go. So 113 10. So to me, especially if I would like to know whether or not price, when could I actually enter on a buy type or bullish type momentum, is I would like prices to go above the psychological number and above. Okay, so I would look into 113.20, let's say, as my psychological level to look out for, because 113.11 on the way up, the closest one is 113 20 is the one that I would be looking out for as my risky area. But if I would like to trade and look into more bullish momentum, then I would like to add 10 pips onto the 20, which gives me 30. So once prices goes up to 113.30, then I could plan my bullish type trades, from there on, because it has gone above the cycle level, giving me more trust that there are more participation from the buyers. Okay, so this is one very important thing. Okay, so the other tip that I would like to add, because I'm giving you lots of tips on price action psychological numbers, because they go a very long way, and they are very important for me to measure my risk in combination with my patterns. So I wouldn't be just trading just the patterns, but I would like to mix and match with some risk type, what do you call that, evaluations, like price action, psychological numbers, spot resistance area or zone, and things like that. Okay, so let me erase a drawing right there, and second. So here itself, now you've got the prices, let's say, going upwards. Okay, one thing that I like doing as well is I always like looking to the left. Always looking to the left, looking at levels like this. Okay, so this would marry up with my area of a price reversal zone. So I can match that area there with this area based on my geometric analysis. So my geometric analysis here sort of tells me, yes, there are possibility of prices reaching here based on my geometric pattern, but also yes, because previously we have got a big fall of price here because major resistance this zone as well, and that comes into my zone as well, and that would be a bit of a confirmation for me of where prices could actually start to fall. Okay, but me wanting to cover my risk, or cut my risk even more, I wouldn't wait till prices go exactly into this zone. I would like to come out before, based on the psychological level as well. Okay, so before that 113.50 area, 113.40, I would be looking at exiting, because I wouldn't want to wait until I get stopped out, or there are risk areas there, because here it's already telling you you've got risk at this area because prices started falling here. You've got another area here because this bearish candle started as well at that area there. So this is bang on the 113.50 psychological number as well. So I wouldn't want to wait till prices go to 113.50. I would like to exit before 113.50, the psychological, to get out before that. Okay, Hope that's clear. Now, I would like to open the session for some questions. Perhaps you guys have got some questions you would like to ask in respect to your current strategy as well on how we can actually match all this one up, and perhaps some tips for you guys on other pairs as well if you guys would like to ask for that. Okay. All right. Meantime, I'll just zoom out a little bit, look into areas that we can look at. So that's basically a bit of a risk to the downside there. You've got a zone right there. So pre-NFP, I'm looking at prices. If at all you've got positivity in the news NFP time, then that should rise upwards. But after it has crossed that zone area here. Okay, that would be bullish momentum right there. Okay, the other thing as well is that if at all it does go upwards, then I see it still reversing and then making a bit of an up, because that would be a Z-like pattern that we will discuss very soon in our next sessions that we have. We've got basic type pattern, the ABCD. We've also got advanced type patterns, but there are systems to combine with these patterns. So I have tweaked them into geometric pattern type trading, so they have got their own trade plan with it, and we're not, as geometric pattern traders, I use the price trade plan. Okay, so PRICE is my own type pattern trade plan, where P stands for something, RIC, and then E stands for execution. So we only execute a trade after we have check listed PRIC and then E, and only then we execute that trade. So we have got technical analysis, fundamental, as well as the patterns analysis. So we've got three areas, but then they all have its own type techniques before we execute the trade. So this is our trade plan here that I apply personally as well. Okay, so that's basically it. So we have got that, and if I go on to the daily chart right there, I just want to do a bit of a analysis based on trend once again, and I usually do that by inserting three moving averages, which is the exponential moving average, and this is just to determine the trend, and I still use a set of 3 time frames to do that. So for example's sake, we will use the 1 hour, 4 hour and daily chart. So I'll try with my trend moving average first. We start off 50 exponential, apply to close. We'll start with the 50, and then we go on to 100. I'm just doing this in the long way so that those who are quite new in applying this could actually follow it. Okay, so we've got 100 and then 200. Okay, there we go. These are the 3 moving averages that I like using in analyzing the trend first. So let's say we're looking to USD JPY. We've gone on to the geometric analysis already a little bit, so giving you the PRZ zone as well. But here, I would like to start off with the 1 hour chart, and all you need to do with the 3 lines is you can always zoom out as much as you can, or zoom in as long as you get it quite clear in terms of the candles and the prices, especially. So here I could see the candles, but if you've got 3 lines like this, okay, the 50, the 200, sorry, the 50, the 100, and the 200, I want the candles to be all under the 3 lines to show me bullish, show me bearish momentum, and if they are all above the 3 lines, that would show me a bullish momentum. Okay, if candles are in between or inside the 3 lines, somewhere inside, they're not above, not under, then I call this uncertainty. Okay, very uncertain market. So I'll prevent myself from looking further until prices have gone, or the candlesticks itself have gone above all 3 lines or under all 3 lines. Okay, so here let's do a bit of an analysis based on trend and these moving averages. We've got candles at the moment moving inside. So let's say 1 hour is your short term, 4 hours your medium, and daily is your long term. Let's say on the short term, let's say we've got a bit of uncertainty going on. We're not sure. It's not a good time as well to trade, especially for myself. I consider it like that because candles are not above all 3 lines, not under. all three lines. Okay, they are inside these areas. So this, anything can happen at this area here. So the market itself, sentiments of the market itself is quite uncertain. So if we go into the 4-hour chart here, it's a bit of a different picture. Okay, we have got candles, even though moving upwards, they're still under all three candles. Okay, all three moving averages, and that itself is giving us a bit of a bearish type momentum because they are under all three candles. So this can be added up with our clock angle analysis just now. Okay, we're at 12 o'clock, 3 o'clock, 6 o'clock. Yeah, so we've got in our analysis earlier on, when we zoomed out, we have seen that overall the trend for USD JPY is at a 4 o'clock type angle. So it's weak, but it's not too weak. So that's what's reflected here as well. That's why it's quite uncertain as well, because we have got candles under all three lines, which gives you a bearish momentum. But again, you've got prices moving upwards. So there's a bit of a mismatch going on. So things are not certain at this stage. Okay, so let's just go on to this one. I'll just clear off my chart. Okay, so you've got that going on, and then if I go on the daily chart, you could see, okay, again, it's in between. It's finding support at this moment, but prices in between all three lines, and between all three lines is giving you uncertainty. So for uncertainty on a daily chart, not very clear on the 4-hour chart. Okay, not very clear on the 4-hour. On the 1-hour chart, again, it's in between the lines as well. So I would then avoid 1-hour, 4-hour, and daily for now, because they're not giving me clear sort of direction. So I'll just go on to the 5-minute chart, lower time frame, and look at any short-term opportunity that I can find. Now here it's a little bit clearer with the short-term 5-minute chart. The 5-minute chart, prices are above the lines. All three lines is not touching each other, which is a good sign. If the lines are touching each other, that gives you a bit of uncertainty as well. But the three lines are far apart from each other, then you've got price coming down, okay, and then finding support going upwards. And that upward move is finding a momentum to the upside. So you've got a bit of a clarity that the short term, as of now, there's still some room, a bit of room for price to go up a little bit. But again, you need to mix that up with the psychological numbers that I've just mentioned to you. Yes, it may go up, but look out for the 20 side number. Okay, you might turn around that area there. Only after it has gone to 30 and above that it will give you much more room for a potential to the upside. Okay, so let's just do that. Okay, so let's start. You've started with 5 minutes. Let's say you've ignored 1-hour, 4-hour daily because it didn't give you the certainty. They didn't give you a clearer picture. Okay, they were inside the three lines and all that. So we've ignored all these three these three time frames. So we've moved into 5 minutes, 15 minutes, and 30 minutes. So now your short-term, long-term, medium-term, and long-term have actually changed. You can make this one your short-term, this is your medium-term now, and this is your long-term now, because you are trading on the short-term at this moment of time. Okay, so if I go into the 15 minutes chart, you could see the same thing. You've got a bit more to look at here, whereby there is a bit of a how do you call that, biasness or preference to the upside, because candles are above all three lines. Okay, now if we go on the 30 minutes here, only then you will get uncertainty again, finding resistance at a 200 moving average. So anywhere soon, prices might on the 30 based on the 30 minutes chart looking at a downward move. So that 30 moving average here, which is a 200 moving average, is matching with the 113.20 side number. So prices anytime soon will be looking at reversing. Okay, because these are risk areas. So it's not really clear, not really good time at this moment of time. Perhaps they're waiting for another hour or two before US Open to give you more momentum, more participation of investors and traders, and then we could see prices moving at least above or under all three lines to give you a better picture, better clarity of the trend. At this stage, it is going to move really slow. It's going to think a lot, and then it's going to reverse and then think again. This is what's going on because it is at a level where it's thinking time, okay, within the psychological levels. It's time, okay. So that's basically it. To give you a bit of an idea based on that. Let's just see whether we could look into a bit of gold at the moment. For gold, we are based on the chart, it's based on the geometric pattern itself. I'm looking at this area here based on daily chart is giving me hints of a big resistant area, and this is a resistance zone in blue. So it's still giving me hints to a downward type movement. Okay, so if we go on to the USD JPY and look into the daily chart, we're still looking at some support there. Okay, so if you find support there and it goes above the 113.80 and above, then you are looking at potential up for the dollar, potential down. So if at all it goes above 113.80 or 113.90 onwards, then you have got more expectation for gold to the downside and more expectation of dollar to the upside. Okay, so that's basically it. Okay, so that's for USD JPY. We'll go back to gold and just give you an idea. Okay, there you go. That is sort of a area that we look into for gold to come down to, but again, it all depends on whether or not prices manages to pierce through that zone between 1214.47. So again, 1214.47, it's 0.47. 47 is very close to the 50 side number. Okay, but this is if you are trading by the cents for gold. For gold, let's say your price is 1214.47. In terms of psychological levels, you can look at this last two digits or this last two digits. If you are a bigger gold trader and you don't care a lot about the cents, then you just look at this one. If you are a smaller trader, smaller equity, still trading gold, but you then look into the decimal place here, 47. 47 is very close to the 50 number. 14 to the upside, very close to the 20 side number. To the downside, very close to the 00 side number. Okay, so we are in between basically, and this has found some type of resistance at this zone, very powerful resistant area. So it's finding a big challenge here at this zone for gold to go up more. We're talking about the daily chart at this moment of time. So as you can see, finding loads of resistance at this zone between 1214.47 and 1225.94. On top of that, we also have the 200 moving average here. So you see all these ones are acting as a wall of resistance. So you need prices to go above and above, higher and higher, to go above that 200 moving average and pierce through this zone to then show you bullish momentum. If not, then you're looking at more price playing around that zone, heading towards the downside. Okay, so that's basically what's going on at this moment of time. Let's look into the other pairs. For the euro versus the dollar, again, I'm seeing more potential to the downside here as well, but we have got a big move expected to the downside here only after it crosses this 200 moving average in blue here, under that blue area. So 1.0720 and below will give you more room to the downside for the euro versus the dollar. So 1.0720 and below, 1.0710 and below would actually then bring prices under this 200 moving average, and then you've got more potential to the downside once it has crossed, let's say 1.0640 or 1.0650 and below. You've got a better probability for it to reach this zone down here at 1.0557 area, this zone here, okay, which is a bearish zone. So that is basically it for the euro USD. For the GBP JPY on the daily chart, we have got quite a nice pattern here that it's basically the A, B, C, D pattern, but if you attach another line before that, that becomes like an M-like pattern. So I don't trade really like the butterfly pattern, excuse me, or the other crab type pattern or the harmonic type pattern. I just simplified into the M type pattern and the W type pattern. So if you find an M-like pattern like this, it's usually made up of the simple A, B, C, D. First, you got A, B, C, D. Then you attach a bigger one here. That's your X. So X, A, B, C, D. And usually if it reaches the D point, then you're looking at an upward move right there. Okay, so this is where we find reversal going up once it reaches the D. So now at this point you have got a bit of a selling opportunity only under the 139.93 and below. So 139.70 or so would be a better ideal or ideal trading area for a sell, and then you're reaching this zone here. So you're looking into the C to D, but you are trading from here to here, which is offering you more a high probability, lower risk trading area as opposed to the others, because here it's finding support, it's got a lot of things that it's doing, and on top of that you've got candles in between all three lines giving you uncertainty at the moment for GBP JPY in the daily chart. Okay, so it's got a downward possibility or probability, but the trading area that we wish to participate as geometric traders is only in this black color zone area here. Once it goes under that blue zone, under 139.93 and below, we're looking at entering there in that zone, and then looking at taking profit before the 136.80 psychological number. Okay, so we've got some good space there because this is the daily chart that we're looking to. Okay, so perhaps we've got the NFP and various other factors on the fundamentals that would actually either pull or push prices up or down, and create more volatility based on that fundamental side of things. Okay, guys, I think we are running out of time a little bit here. We have got more to cover on the basics, more practice on the basics of what geometric patterns are based on the ABCD pattern, how you convert them, more on the step-by-step and the basics and all that at 4 p.m. my time, Cyprus time. So feel free if you want to go into the basics there. Of course, we will use some live charts as well, and by then we'll be able to look at the results of whatever I have shared with you as well. So that will be quite an interesting session later on. So for those who join me now today, feel free to join again. Click onto the registration button for the basics of geometric patterns analysis at 4 p.m. Cyprus time. Okay, so that will be 6 p.m. if I'm not mistaken, Dubai time, and there will be 10 p.m. Malaysian time. Okay, so that's basically on that. So I'll just open the session now for questions. If you guys have got any questions at all, or any pairs that you wish for me to look at before I go, before we leave the session, feel free to do so. Questions at all, guys? Any question at all? Sixtus, Marina, anyone would like to? I think you guys have got some questions with gold initially. Okay, Aditya, I've got a question here. I know it's a very short question for a lot of things. That's why we are planning more shorter sessions, more tutorial sessions as well for you, for all of you, Aditya. So, okay, you've got a question here. You would like to ask if I have pre-recorded sessions. Yes, you can always request that. You can always contact either your account manager at Blackwell Global, or for those who have been introduced to this session, you can always contact the point of referral for yourself, and we can get that organized. Okay, not a problem. All right, Sixus, no problem. Okay, so Marina, that's good. So we're clear on this. So no sessions. If at all you would like to send any questions to me directly, you can always send it to kenny@epicgeometry.com. That is one of my emails there that you can actually contact me. If not, then contact your account manager as well as the person who introduced you to this webinar. and we can get back to you on your questions and share with you the link on this recording. All these sessions will be recorded as well, so feel free to ask. Okay. The next session, I would say, with a slight difference, because this session is more for the ones who have got some basics of Forex at least, but the ones who are total beginners who have just learned about Forex a bit on the beginners, I would like to share on what geometric patterns are, small things, and also go into the trend and things like that. But one extra thing for you guys that you guys can take from the next session is the results of what we have talked about today. So you can see it for yourself how the geometric patterns have actually played out, and perhaps you've got questions from that moment onwards, and I'll be happy to answer. So yes, you guys can join in as well. I think it would be interesting, an interesting sort of session for both. If you guys still want to join in, that's not a problem. Okay, guys. Thank you very much once again, and have a very good day, and see you guys for the next session then at 4 p.m. Cyprus time. Okay, thank you very much, and good day. Bye bye.